Hello and welcome to Asking for a Trend. I'm Josh Lipton. It's a big earnings day, and we're tracking all of the big movers after hours. So let's get right into it. Tesla, top earnings estimates for the fourth quarter, plan to further invest in the infrastructure needed to support clean energy and autonomous robots. Yahoo Finance's Pras Subramanian joining now with the latest. Pras, walk me through the print.
Yeah, so you mentioned the earnings beat there, 50 cents versus 45 adjusted EPS there, beat there, operating income better than expected. Slight miss on the revenue, but still some good updates here from the shareholder deck. Preparations continue in North America for production ramps of Tesla Semi, Cybercab, et cetera, both commencing, and the next generation Roadster, right? So and that includes 6 production lines of new production lines to build some of these new products. What are we talking about here? Optimus robots, right? They said they will unveil the Optimus version 3 in Q1 of this year, which is the production model of Optimus, and that they aim for a production to start at the end of the year with an eventual capacity of 1 million robots, so that's good. Robotaxi stuff, not much there. They mentioned the safety drivers were moved in Austin, but not for all cases. No new regions noted. And also FSD testing in Europe and China commencing, but no approval yet.
So let's say you're on the call, all right? Musk says, all right, over to Pras. You have a question or two for Mr. Musk. What do you ask him? What do you want to know?
I think it's got to be robotaxis, right? So I think that they're saving some of that news for the call. So for instance, more about the safety drivers. When are we going to see more of those taken off the roads in Austin? Secondly, what about the expansion to Arizona and Nevada? Is that going to happen? Is that still on track? Do we have any loose timelines there? Are we going to see potentially 1,000 robotaxis on the road by the end of the year? That's what Morgan Stanley believes. So I think a lot of questions around that business, the most sort of compelling, but also the most immediate business of theirs that's not automotive.
Adam, over to you.
Yeah.
Speaking of all things Musk, my friend, you saw this headline today.
Yeah.
The FT reporting SpaceX weighing a mid-June IPO,
Yes.
aiming to raise as much as $50 billion, valuation of about $1.5 trillion.
That'll make it one of the 20, maybe even more than that, biggest companies in the world. And it's a brand new company, SpaceX.
You excited to own SpaceX?
Everybody's excited about SpaceX. And yes, I will buy it. I'm going to keep it small.
You will buy it.
The valuation is very high.
Yeah.
But if you size it correctly, it's okay. In other words, I'm not going to buy a 10%. I'm not going to put 10% of my money into SpaceX, but I'll put 2. I'll put 2% of capital. I think it's a must-own story, and
How come? Why do you say that, Adam?
Well, because who else is going to space in this capacity? Who else is launching rockets into space and landing them back on the same pad and reusing that equipment over and over and over again? And where's space going? We don't really know. It sounds absurd. I feel almost foolish saying this, but there's talk of putting data centers in space because it's cold and you don't have to cool them. Space takes care of that for you, and then you just beam the data down. Might that be a business? And yes, it might be. And who is best positioned to do it? SpaceX. Who knows what else is out there for space? So I think you need to be there. I think you need to be part of it.
I mean, you got free energy out in space.
Yeah.
Right. And also, I want to note that
Good
it's going
point.
to be Gemini and Cancer zodiac signs in June because Musk is seeking that planetary formation and also on his birthday. He's into the stars.
Well, I can't comment about Cancer, but Gemini, the twins. So I don't know where you're going with the twins.
All right, listen, SpaceX believer, that's the bottom line.
I'm a
Thank
believer.
you, Adam. Thank you, Pras. Appreciate it. And for a closer look now at Tesla's latest quarterly results, let's welcome in Morningstar senior equity analyst Seth Goldstein. Seth, first of all, just give us your take on this print. We're in the green here. What do you make of it?
Well, I think the market reacted to the strong profitability, adjusted EBITDA, adjusted EPS, free cash flow, all beating consensus estimates. And now we have better visibility on the near-term plans for Robotaxi and Optimus. And so Optimus will enter production in 2026. I think that surprised the market, maybe an accelerated timeline. And we have 7 new cities for robotaxi expansion in the first half of 2026. It's a loose timeline. I'm hoping to hear more on the call, but all positive things. And we see the stock up after hours reacting to these news.
Now, Adam, let me bring you in here as a Tesla shareholder.
Yeah.
You agree with Seth here? These are the reasons, these are the headlines. We can see this movement in the green.
Yeah, these are the headlines that are driving the stock. But as you know, this is not why I am buying the stock. Yeah, robotaxi's an immediate catalyst. Fantastic.
It's robots. You're a robot guy.
It's the Optimus robot, and as Pras just mentioned, the company reiterated in the press release that yes, they are on target to produce 1 million of the Optimus robots at some point in the next couple of years, which I interpret as 2027 to 2028. And as I mentioned before, 1 million robots at a profit of 20 million per robot is 20 billion in net income, and that's more than the 13 billion in net income they made in their record year, which was 2022.
Seth, do you share my friend Adam's enthusiasm for these humanoid robots?
Well, I want to hear more from Tesla first about where they're going to use them in their own factories. I know Musk has said he wants to start selling them to consumers by the end of this year. And now, anytime Musk makes a bold prediction like that, we do want to give it a few years at least before we think it's going to be set in stone. Yet, if Tesla can find a way to make Optimus robots profitable and helping to make its factories more profitable and useful in a Tesla factory, then they can start selling them to commercial customers, maybe other manufacturing facilities, maybe something like an Amazon warehouse. And if so, then you have a strong commercial outlook for the robots, and then you have a second lever of selling them to consumers down the line. So I am long-term enthusiastic about Optimus, but I want to hear more details about what they're going to do, what their initial capabilities are on the call tonight.
Now, Seth, to Adam's point, which is well taken, there's a lot of Tesla investors. They're not in this company for the EV business. They're in it for the Musk vision. They're in it for the AI opportunities. But on the EV business, team at Canaccord, here's what they say about it. They say Tesla, they say that EV business stands alone, they say, in the U.S. with a truly scaled, integrated EV franchise. In other words, they say EVs in the U.S., Musk is top dog. Do you agree with that? And what is EV demand overall? What do you see for that market going forward, Seth?
Yeah, so Tesla is still the king in the U.S. for EVs. They're the only one that can offer a long-range midsize SUV or sedan at an affordable price that isn't too much greater than the best-selling internal combustion engines in that category. So a Model Y, not too much more expensive than a Honda CR-V or Toyota RAV4 with the new standard prices. And so I think that does make Tesla still the king of the U.S. EVs. But for the first 3 quarters, we're going to be lapping the end of the EV tax credit that ended in September. So I expect EV sales in the US will be down for the first 3 quarters. Now, Tesla might be down by less if it can make a compelling argument for the Model Y by improving its full self-driving software. And so we'll as the year plays out, we'll look for that. But ultimately, I think EV sales and Tesla sales will be down in 2026.
Seth, what about FSD, full self-driving system? You saw this, how Tesla's now saying it will be only available as a subscription. How, as a financial analyst, did you read that? Do you read that opportunity?
I think that was always the plan, was to transition this to a subscription-only basis. And eventually, Elon Musk wants to raise the price once it gets to an unsupervised full self-driving, when it becomes either level 3, level 4, level 5. Either way, when Tesla takes over and as the passenger, we no longer have to be paying attention to the road. We can look at our phones. We can take a nap, read a book, do something else. And I think that's going to unlock a lot of extra profits as they can raise prices with those software-like very high gross margins.
Final question, Seth, kind of a bigger long-term question. You know who else is very interested in self-driving cars and robots? Jensen Huang. He is very interested. I have seen some smart folks, Seth, argue NVIDIA is a long-term competitive threat for Tesla. They argue, listen, this is an underappreciated risk for Tesla. And I'm curious, you know the company backwards and forwards. What's your answer to that?
Well, what NVIDIA is going to offer is going to be the ability for an automaker to create an AI self-driving system, but ultimately, you're still going to need to create the software, the system yourself. You're still going to need to train the software. And so we see right now Rivian is trying to do this with their own system, independent of NVIDIA. And so I do think longer term, this can help other automakers develop their own AI software, which doesn't mean they're necessarily going to have to license it for a company like Tesla. But in the meantime, Tesla's going to maintain a very far lead. They're well ahead of the game only really Waymo can compare with their autonomous driving software, and Waymo does not offer a consumer version. So I expect Tesla will continue to maintain its lead. And while NVIDIA might be embarking on a real-world AI platform and be a competitor for things like Robotaxi and Optimus, right now Tesla's in the driver's seat, and for auto, I think it will maintain the lead.
Seth, thank you. Appreciate it as always. And Adam, thank you as well, my friend, for joining in all the earnings action and fun.
Thank you.
Coming up, we bring you the big takeaways from today's market action. That's next on Asking for a Trend. Stocks closing near the flat line as the S&P 500 slips from its record. Yahoo Finance's Jared Blickery joining me now with the trading day takeaways. Jared.
Well, thank you, Josh. We got to start with the ho-hum action in stocks. And you can see that was a very choppy chart that we had in the Dow. So what am I saying here? Stocks shrug, but gold surges. So let's go back and take a look at a few more charts. In fact, just to highlight this again, I haven't seen a Fed announcement day this choppy, this quiet in some time. That's just the Dow. You can see it closed barely in the green, up 12 percentage points. There's the NASDAQ, there's the S&P 500. But let's go to gold. And that was just on a tear, even for gold standards. It was gold standard. It was up almost 6%. And I went back, and according to some measures, and depends on how you slice and dice and put together the futures contracts, but haven't seen a move like this since March 19th of 2009. You know what was happening back then? Very beginning, just a few days into QE1. And that just kind of tells you the strength of the move here. Let's check out the year to date, and you can see it's up 25%. In fact, only a few days ago, it was up quite a bit lower. Let me just go to the 10-day because I think it only crossed the 5,000 mark. Yeah, that was last week, somewhere in there. So it is just on a tear, and it's not just gold. Of course, it's silver too. That is, if it's not a record high today, it's very close. But also in the upper left, PA equals F. That's palladium. And if we go to the year-to-date totals on all of these, you can see silver up 65%, platinum up 26%, and gold just behind. Palladium up 25 as well. And the upper left, though, that's 99%. That's natural gas. Natural gas prices for February delivery have more than doubled this year, but that's kind of an outlier because of the weather.
So beyond the here and now, my friend, you're looking farther out to 2026. Yes. You're wondering, what are some potential pain points I got to have on my radar? You would say what?
Yes, I was just asking that very same question to Steve Sosnick. He's the chief strategist at Interactive Brokers. And this is for an episode of Stocks in Translation, a podcast that comes out Tuesday morning. But here's what he had to say about one of these headwinds this year.
It's a midterm election year. Right. We've had 2 down years in the last 10. Care to guess when they were? You mentioned one of them, 2018. The other one was 2022. What do they have in common? Midterm election years. We had obviously a big, sort of bear market moves in 2020, obviously, and again last year with the Liberation Day. But in terms of lasting down years, those were the 2.
And he had quite a list there, not just midterm elections. Also, the market is pricing in a number of Fed rate cuts, probably going to get a disappointment on that front. New Fed chair. A lot of times when we have a new Fed chair, they are tested early. In 2018, Fed Chair Powell came in right away. He was tested with Volmageddon in February. Look that one up. And also a near bear market in December of that year when he mentioned autopilot with respect to, quantitative tightening. Also, a weaker dollar. And we're going to get into the dollar in a second. That can be inflationary, so it kind of goes both ways there. But also, we are in the 4th year of this bull market. That's another one. AI spending concentration risk, and then rates. We might actually have longer-term rates shooting up, and that would be a headwind for stocks as we've seen in the past as well.
You mentioned the dollar. Let's hit that.
All right. Dollar, is it a false breakdown? I'm going to show you the price action in the US dollar index, the so-called Dixie, as it happened recently. And just take me a minute here to get up. Basically what's happened is we have broken a long-term trading range, and we have shot right back up into the prior trading range. So let me put a 3-year chart so we can see what's going on here. There we go. So we got this big trading range, and then we were down here, and then we kind of shot below that. But let me show you the 5-day view. We actually came up a little bit today. So in the long term, I'm going to put a 5-year chart here. We might be setting up for a potential false breakdown, which is something we've seen in the dollar a lot. But as you can see, The trend is down here, and so if we don't get an immediate pop above 27, I'm thinking we're probably going to see some more dollar weakness. The immediate consequence of that, it's bullish for stocks, but longer term, if inflation picks up, then that becomes bearish for stocks.
All right, thank you, buddy.
bet.
Appreciate it. Stick around, much more Ask for Trends still to come. President Trump held a summit today to encourage Americans to sign up for Trump accounts. Yahoo Finance Fed correspondent Jennifer Schonberger spoke to Kraken co-CEO Arjun Sethi at the event about the possibility of adding crypto investments to these accounts and more.
If you take a step back, post-World War II, Japan, Netherlands, just the rebuilding of Europe and Asia, you had a lot of folks building out what they call prosperity accounts, is what we call it today. In the United States, we call this Social Security, but it was like poverty prevention. And so what you've seen is that those assets post-World War II might have started in the billions, but today they're 50 trillion plus. And all of those accounts have been towards sort of the reverse. Instead of thinking about investing in retirement, they've been investing in the younger age individuals. And so Australia, Japan, Netherlands, Europe, et cetera, they've been able to do this quite effectively in investing. And so people argue capitalism and financial inclusion. What it really means is that you have multiple generations that have the ability, what I call a forward mobility, to invest in assets all over the world, including in their local region.
And how are you specifically looking to play a role in these accounts? How is Kraken looking to play a role?
So Kraken is in the crypto ecosystem. So we're all about giving access to capital, giving access to new assets. So today we talk about BTC and ETH. Soon it's going to be commodities.
Bitcoin and Ether.
That's right. Bitcoin and Ether and alternative crypto assets. But a lot of the alternative crypto assets are now giving people access to just the US dollars. And the next thing that people want to invest in are US companies or companies all over the world that are emerging. So crypto is about just giving more forward mobility all over the world. We use the word financial inclusion, but it's more about giving the same rails that we're used to in developed markets into emerging markets. Mm-hmm. And I think what's great about programs like Trump accounts is it just gives more people an understanding of what they can participate in at a faster and faster pace when you think about open financial rails.
Now, speaking of participating in capitalism, we know that you have an IPO coming down the pike here, perhaps sometime in the first quarter. Could you give us any sense of the timing on that?
Look, we're a private company today, and we're focused, and we've been profitable since day one. Last 5 quarters, we've released our financials, which is great. I think what's more important is how do we operate within this realm of how we think about financial services and products. And so we want to continue to proliferate that regardless if that's private or public.
Do you have any idea what price per share could be at this point, or it's too early?
No, I mean, look, we confidentially file, and that's the most we can speak to it.
And I also want to talk about, there's some major legislation moving through the Senate right now as it pertains to the market structure bill and crypto. What are your thoughts on where the bill stands at this time? Do you side with the CEO of Coinbase, Brian Armstrong? Did you have issues with this bill, or do you support it?
Look, we have worked on these types of legislation outside the United States already. In Europe, we went from design to implementation. And here in the United States, we're in catch-up mode. And so a lot of these arguments around what people are talking about today, which is yield, listings, how do we work with protocols, getting them onto the exchange, global liquidity, et cetera, have already been figured out. And I think what you're seeing today is, yes, in terms of what Brian is talking about, in terms of yield, I'd say we're very much locked in and arms with them around what's best for an American consumer, what's best for our issuers, companies, protocols, et cetera. And I think that's where we're going to continue to have the conversation with lots of folks around the table on the banking side and the Senate financial side, et cetera. I think most people understand what we're trying to do and what the future is going to look like. But a lot of the times people will get lost in the nuance. I'm like, well, what happens now in zero sum? If you're going to add trillions, 100 trillion plus of market participation worldwide into this ecosystem, it's better to reframe that conversation, similar to how we're reframing Trump accounts versus the Social Security layer.
Thank you so much for your insight. So appreciate it.
Thank you very much.
It's great to have you on the program. That's Chief Executive of Kraken.
It's been a busy day for earnings. Here's a look at some of the other names we're watching. We're watching shares of IBM for one. That stock soaring after hours on better than expected fourth quarter earnings. Company seeing strong growth in its software unit. Sales were up 14% from a year ago, and IBM's revenue guidance for 2026 also coming in above expectations. On the flip side now, ServiceNow under pressure here on earnings results. The results topped expectations, and its subscription revenue guidance for the current quarter also came in just above estimates, but the threat of AI still looming over that company, whose shares are down 45% over the last year. And finally, Southwest shares flying high. The airline top in fourth quarter earnings estimates, and its profit guidance also beat. The company's in the midst of a turnaround, which is showing signs of taking hold. Just this week, Southwest transitioned to assigned seats on its flights. Time now to watch Thursday, January 29th. We're going to start off on the earnings front. If you didn't get enough tech earnings, we have more on the way Thursday. Headlined by Apple's first quarter results. The iPhone maker reporting after the markets close. Analysts anticipating Apple's report may hinge less on iPhone demand and more on margins this quarter. Memory prices are rising sharply, and while Apple is likely insulated in the near term, investors will be listening closely to guidance for signs of pressure later this year. Another key metric analysts are watching whether delayed iPhone sales finally show up in Q1 and if services growth can help offset higher hardware costs. Moving over to housing, we're going to be getting new mortgage rate data from Freddie Mac on Thursday. 30-year fixed rate ticking up to 6.09% in the previous reading. Elevated rates and affordability issues continuing to be a thorn in the side of not just home buyers, but also President Trump. And on the job front, fresh data coming in on Thursday with initial jobless claims. Economists forecasting claims to increase compared to the week prior, 205,000, signaling slightly more people filing for unemployment for the first time. That's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet.